what's going on? Good morning, good morning, good morning. It's Jeremy back with we're gonna do like a super brief recap and then outlook for this week. So it is actually October the 20th, so it's Sunday morning. It's about 11:14, about a quarter 11 uh, this morning. So let's I don't want to waste too much time. I'm on the 5 minute. Actually, we could kind of do it from the 5 minute, but I want to take it back out. Um, let's first start at the weekly, and I've not taken any annotations off this chart, like none whatsoever. So you're gonna see like quite a few. I'll take the drawings off here in a sec, but this is kind of important, I think, just to get an idea of what I was looking at, what I was seeing, and so forth, so on and so forth. So let's just take this off real quick. Okay, so first the first thing to kind of observe, if you're just looking at it, and I left the executions on, it is what it is. But the first thing that you should notice is that on a weekly, we've this previous week, this week that we're just coming out of, we've cleared a weekly high, right? But we've cleared a range of highs. So there's something that I'm still actually back testing, not really going to talk about here, but there is an idea and a concept where everything being fractal, um, there's a mechanism, there's a tool, there's a certain run of liquidity that's going to show basically what potentially the next candle or the next week's candle, so on and so forth, is going to print, right? So, I mean, gotten that out of the way, you would initially think, okay, well, hey, look, we've already cleared this previous week high, and at least at the outset now going into this upcoming week, where do we close? Well, we kind of right now close back inside, right? So that would indicate what, on a weekly time frame. For those of you that are familiar with it, he didn't coin the phrase. I've been watching some words of wisdom and some other things that he's been doing. So I was getting ready to say turtle soup, and he popped in my head from something I saw yesterday. But anywho, we cleared previous week. We're gonna close inside, so I don't have to tell anybody that doesn't know, but it's basically souping this high. However, however, um, this week is kind of gonna go against the soup idea, okay? And this is one of the areas that this is gonna get a little interesting, okay? So that's the weekly. So the weekly clearly says, hey, this is souped, so maybe you want to target this. Okay, so let's just keep that in the forefront. Let's drop down to the 4 hour. Okay, the 4 hour is going to tell a similar story. Um, so one sec. Let's go back and let's just do this like this real quick. I don't know what it can't be red. So let's make it gold for right now. All right, and let's go back to the 4. Okay, so I'm sorry. Well, because I don't know why something said you should have just go ahead and put it at the bottom of that as well, but I did it. So we'll do it now, which is there. All right. Okay, now we can go back now. All right. So here's previous weeks. This is the previous week range, right? Now, what do we have here on a 4 hour? So we do have fair value down here, right? But this is actually, in this case, this fair value is acting as a breakaway gap. This was basically a fair value that was retested to push price higher after essentially taking out a previous high, right? So The way that I typically excuse me, look for trades from again from a fractal perspective is um, I'm looking for some level of liquidity to be taken. We're also looking for a return to that level, maybe a retest potentially, fair value to deliver in the opposing direction, right? So if we look from a weekly, from a higher time frame perspective, again, the gold is going to denote weekly levels. The gold also denotes essentially on a weekly time frame. This is that soup, right? This is the turtle soup. This is the wick through, the clear through, and the close back within. Well, we have that here. Okay, so as we see it fractally on a 4 hour time frame, um, a very simple notion and idea is very simply. I use this instead of a dollar sign, so that's why you'll see this guy hanging out. This could easily be your draw on liquidity for this week. Okay, and again, very simply and very concisely, what's the reason and the probability? Like, why would that be? Because you've taken out the previous range high, right? You've taken out a previous range high. So last week took this previous week out. Okay, it souped it, it wicked above it, and it closed back inside. So everything here from basically a delivery and a price action standpoint, like where what is the mitigation? Where would it be? Where could it be? Nothing is closed back above this weekly level. You basically had that level taken and a basically a close directly back inside. So your fair value for that weekly would be right here. So there to here, and that's your fair value. That is your fair value, and for the most part, I mean, you could say there's a closure and an open above, barely above consummate encroachment on the higher time frame. With those two being the outliers and the exceptions, everything else has been the wick doing the damage, the body telling the story, all body closures below. So again, in its most simplistic form, that is your draw on liquidity. Your draw on liquidity for the week is here. Okay, now intraday may present whatever, and we'll look at that here because we've got a little bit of time. And again, this is NQ. I'm sorry, I didn't say what the market was. I just kind of assumed. It's primarily what I look at is NQ. I just want to lock this real quick. Don't want it to move. All right. So as we zoom in, last week we actually cleared out some lows, and I use basically from the weekly to the 4 hour to 15 to 5. So typically I'm looking at 4 hour levels. I'm looking at a very specific 4 hour level, which is a 6 a.m. candle for NQ, which is why you'll see, the dates denoted with the 6 a.m. High and low. So again, going back and revisiting this concept, we've taken out for 18, today's 20, 18, 17. So for Thursday, don't mind me. So for Thursday, 6 a.m. candle range, we took out the low, okay, which, let's see. Yeah, which was here, right? And again, it's another one of those cases where you souped the low. All right, so there's no body closure beyond this level. I just basically put this in. This ray is just indicating that there is sell side liquidity sitting down here at some point to be swept as here. But ultimately, what ended up happening is the Thursday 6 a.m. low, we had a closure inside. So the anticipation is to see basically us run back up into here. However, and this is where you could allow price action to dictate whether or not you want to remain in line, or if you ever want to be a contrarian, and for what specific amount of time do you want to be a contrarian. What do I mean by that? Well, I don't have to go all the way back out to remember that this level right here was basically the high of the weekly structure that was souped from the weekly time frame. So as a contrarian, are you really looking immediately to run up into Thursday 6 a.m. high? Absolutely not. There's some people that would say the weekly time frame is enough for me to not just be looking for buys. That is also another aspect of how to kind of keep yourself out of trouble. But let's go back really quickly one more time, and I want to give you a little nugget. And I know that this is something that everybody's going to say, we already know about this. Like, why are you bringing it up? What's the point? Yada, 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 right? Okay. Well, there's a reason for why. And we're going to just do it from here. And some will say, why would you do, why is this range important? I will say, because this is the present range on the weekly that we're in right now. Okay. Now, what I'd like to do is I try to keep it real simple. So I don't use a fib on purpose. I do it deliberately. I'm going to say it again. I do not use a fib for this purpose on purpose, because all I want to know is where it is in the range. So I'm just starting out here so you get an idea. So I'm going from this high, just right here, to this low. And you would say, well, why? Well, this is the range that I'm in on the weekly. Now, if I pull this across, right? If you just look at that, and we're not looking at it from any other purpose, I could designate a red and a blue, a green and a blue, a white and a black for premium discount. Doesn't matter what you use. I keep it simple. The philosophy is going to be the same no matter what the psychological color that you're looking at, right? It doesn't matter. I've basically taken this box, I've taken the midpoint of it. I know anything above the midpoint is a premium. I know anything below the midpoint is a discount. So at this point, I'm just looking at what the range is showing me. Where am I within this PD array, right? I'm clearly in a premium. So this kind of goes back to what I was just speaking about on the 4 hour. Am I immediately looking for that Thursday 6 a.m. Candle range to be taken out? Am I looking for it immediately? No. Am I really looking for it right now? Maybe, maybe not. I don't know. Sunday is always, an interesting outlier, and sometimes Sunday is a continuation, sometimes it's a consolidation, sometimes it just says, hey, what the hell? We'll just go ahead and we'll go and take care of that, and then we'll do the rest of our business, right? But, again, if I'm starting the week out trying to understand where might I be, like what's the most obvious? So the most obvious to me would be this week, I'm probably going to be bearish. Why? Well, one, my PD array is telling me so, right? That's the first thing, okay? That's the first thing. So now that that's out, and you just kind of think, okay, bearish. But I need the context for bearish. Okay, well, we took that entire range, right? It was way beyond the weekly candle, right? Okay. So now let's just use this range. However, here's the difference. We're not going to just use the weekly range. We're going to use the soup as well. Same concept, same idea. Okay. Low to this high. Where are you in the range? You're still in a premium, right? Should still be in a premium. We're still in a premium. Now, again, we're just trying to filter information, okay? So this could be the thought process. We're filtering information. Premium on a weekly, we're likely going to be bearish. You're looking for shorts. You're not really looking for buys. You're looking for shorts. Okay, great. 4 hour, we take a range. Well, in the 4 hour premium, we're still looking for sales. We're still in the range. Something to think about. Because we took basically the break of this weekly, the soup, if you will, on the weekly, this range had already been created. So what did we do on Wednesday? Well, Wednesday last week set the low of the week, right? But Wednesday also last week did what? It dipped into a discount. Okay? So with it dipping into a discount, we obviously see the buyback up, right? We also see on Thursday um, at the 6 p.m. open. So this is electronic trade hour. So you would say, that doesn't really count. Which okay, you could only be looking at regular trade hour, electronic, not really that big of a deal. However, it can't be disputed that we did dip back down into a discount. We bought back up, okay, and now Friday we're in this range. Well, what are we still looking for going into this week? Well, we're probably still looking at bearish price action. We're still looking for sells. In the interim, and we can kind of get rid of this so we can see where that actually lines up, right? So the midpoint, this discount lines up in between this sell side liquidity and that sell side liquidity, right? Okay, so let's get rid of that and let's get back, since we're on a 4 hour, lock that real quick. Okay, so we're back here again. So Friday has done a couple things to either help us or kind of maybe sort out maybe what you could be if you wanted to trade later today when the market opens at 6 p.m. or if you wanted to get into a position tomorrow, let's just say. What you can do is there's already an opportunity, potentially, just depending on how we open it at 6 and what that first hour does. But Friday already souped the high. It already took that. It closed inside. This is your 2 p.m. candle from Friday. So you're already in this range here. So let me bold this out real quick, and then we're gonna drop down, and I'll show you a potential. I'm not gonna tell you how to enter. I'm not gonna tell you what and where, but I'll just show this to you just because we're looking at it, all right? And I'm not gonna say if it were me, I would. Not a financial advisor, not financial advice. Just take it as information. And I would almost always challenge you, just go look into your chart, see if you see the same thing, see if it makes sense to you, see if it fits your trading appetite, and then go for it. Nothing is 100%, but when you have like an idea and you understand what this is that you're looking at, in this case you could say, okay, well, it souped out the 6 a.m. high, closed inside, the next candle opened. We saw the manipulation here. We saw a push, and then it's kind of closing. It's going to close inside this candle. You can drop all the way down to a 15-minute, and let's stop at the 15 real quick, and then you can see, okay, so on the 15-minute time frame, you see a lot of what? This is a lot of accumulation, right? But that's your 6 a.m. candle range sell side liquidity sitting here. You've already swept this out, and again, we go back to the same thing. Lower time frame, we've had a couple of incidences where bodies have closed and opened above, but primarily what's it doing? It's respecting not just the 4 hour level. What's it really now later in the day? What did it really start to respect? That weekly. So it hasn't gotten back above the weekly. So context and confluence is one of the things that you could look at for these first couple of days. And by the first couple of days, I mean when the market opens today at 6 p.m. Eastern Standard Time and going into Monday. Obviously, whatever your rule-based system is, if you have a rule-based or mechanical system, whatever that is, make sure obviously you follow that. However, when you get basically two overlapping time frames, two overlapping higher time frames, that kind of suggest and indicate, what's the probability, and what's more probabilistic for you in terms of what you could or could not be looking for. Like I said, you could wait for market open, and you could simply do whatever it is to, and I'm just doing this as an example on a 15. You could be some level of aggressive, and you could put a stop up here, and you could just say, hey, look, I'm gonna hold till here. And the advantage that you have, if you're doing something like a micro and not a mini, is going to your practice accounts, going to demo, because I do it on a paper trade account just because you want to see what that is. Here's what I was going to say to finish that thought really quick. From a 6 p.m. when you have a narrative and you have the time and the uniqueness of taking a position on Sunday versus during the week is sometimes it may take a little bit longer to play out, right? And in some cases, the earlier you get in, the more beneficial it is, because if if you are on the right side, you can have price move in such a way that it allows you maybe to take a partial. It allows you to move your stop to break even. Again, if you've have enough things that line up that allow you to realize that you were actually on sides with the move, and a Sunday to a Monday 4:15, excuse me, 4:20 p.m. Eastern time gives you a lot of time to allow a position to play out that is ultimately what it's doing. So what I'm saying is let's say at about 6:36 or what have you, and this is just hypothetical, just throwing this out there, that let's say 6:35 or 7:35, we'll give it the first hour. So by 7:35 this evening, before Asia session, you see this setup, you see this move, right? If you see this setup, you see this move, you can allow that to play out if it moves in your favor, even if it doesn't get down here before open. If you're confident enough, just let it ride. Maybe you've taken a little bit off somewhere in here and you've moved your stop and just say, hey, look, it's going to be a risk-free trade. And maybe that's your position, and maybe price, excuse me, maybe in all of this, price is done something like this. I know it's horrible. Well, maybe price is sitting at this level, and that's 11:30. Well, you get the idea, right? We're coming up on maybe the open, and your price is sitting here. Well, is it really going to come all the way back up here and take that out? It's possible, but if it does, guess what it does? It'll stop you out in profit, or it'll stop you out at break even because you've already taken a partial. The point is, you're allowing you're allowing whatever's going to happen to happen. If in a situation like this, obviously maybe you get in and there's a little bit more risk that's involved at the beginning. That is always, a possibility until you get a certain amount of movement that moves into your direction, and you can mitigate that risk, or you can eliminate it altogether and go risk free. So again, just an idea. But yeah, I would say this week be looking for bearish price action. We did take out a recent high, and ultimately, going back to the 4-hour here really quickly. These would obviously be two areas of liquidity resting above. Obviously, Thursday is an area for liquidity resting above. But at the outset for this week, I'd be looking to see if we can't take out sell side from Friday, and maybe potentially run these sell side liquidity lows as well. This is not to say that because the higher time frame on the weekly took out buy side liquidity that we cannot run back above that. Don't know what the composite operators and those that actually would instruct or codify something to run higher when all of the analysis, the technical analysis, would say that we should be short. Don't know what they've got in mind for this week coming up, but the shorts may be in for the interim before resumption long, and I would almost dare to say if there is a resumption long, maybe pop one or two of these potentially, and maybe another short. Don't know, but yeah, that's it. This one was a little bit longer than it had been for previous weeks, but thanks for everybody tuning in. If you got any comments or any ideas, thoughts, leave them below. I appreciate the viewership. Thanks for the subs. Looking at quest for 200 now, so we're on the path for 200 subscribers. So I appreciate you guys for tuning in, signing up. Like I said, leave me some comments, questions, what you'd like to see for the channel coming up in the future in the comment section below. All right, take care, happy trading, be safe, be profitable, and stick to your rules. See you next time.